from literally $0 to over $126,000 in just 16 years. Bitcoin has delivered returns that would make even the most aggressive Wall Street trader's jaw drop. But here's the thing, most people miss Bitcoin's explosive growth isn't random. It's not just hype. There's a mathematical secret baked into its very code that creates what might be the most powerful wealth-building mechanism ever designed. Today, we're going deep into the real secrets behind Bitcoin's mind-blowing growth. And I guarantee some of what you're about to learn will completely change how you see this digital currency. Let's dive in. Here's Bitcoin's first secret. It's the only asset in human history with perfectly predictable scarcity. Think about gold for a second. We've been mining it for thousands of years, and we still don't know exactly how much exists. New deposits are discovered. Mining technology improves. The supply is uncertain. Bitcoin? Completely different. There will only ever be 21 million Bitcoin, not 21,000,001, not approximately 21 million. Exactly 21 million. This is written into the code, and no government, no company, not even Bitcoin's mysterious creator can change it. But here's where it gets fascinating, and this is the secret most people don't understand. Every 4 years, something called a halving occurs. The reward miners get for securing the network gets cut in half. Let me show you what this looks like. 2009. Miners earned 50 Bitcoin per block. 2012. First halving dropped to 25 Bitcoin. 2016. Second halving, 12.5 Bitcoin. 2020. Third halving, 6.25 Bitcoin. 2024. Fourth halving, 3.125 Bitcoin. See the pattern? The supply of new Bitcoin entering the market gets slashed in half every 4 years. And here's what happens next. After the 2012 halving, Bitcoin went from $12 to over $1,100 a 500% increase. After 2016, from $650 to $20,000 a 0% surge. After 2020, from $8,500 to $69,000, an 800% rocket ship. This isn't coincidence. This is supply and demand playing out in real time. Less Bitcoin gets created right when more people want to buy it. Secret number 2. The big money finally arrived. For years, Bitcoin was dismissed as magic internet money for tech nerds and libertarians. Warren Buffett called it rat poison squared. Jamie Dimon said it was a fraud. But 2024 changed everything. In January 2024, the US approved spot Bitcoin ETFs funds that actually hold real Bitcoin. Within months, these ETFs accumulated over $15 billion. By some estimates, they now hold around 7% of all Bitcoin in circulation. Think about that. Institutional money that wouldn't touch Bitcoin with a 10-foot pole suddenly poured billions into it through traditional financial channels. But it gets better. Companies started treating Bitcoin like digital gold. MicroStrategy accumulated thousands of Bitcoin. Tesla added it to their balance sheet. PayPal integrated Bitcoin payments. Even El Salvador made Bitcoin legal tender. And here's the kicker. According to recent data, in September alone, Bitcoin ETFs purchased 32.9% more Bitcoin than was actually mined. They're literally buying up supply faster than it can be created. Remember that halving we talked about? It's cutting supply, while institutional demand is increasing supply needs. It's like trying to fill a swimming pool while someone's making the hose smaller and more people are showing up with empty buckets. The math is simple, but the implications are massive. Secret number 3. Bitcoin's value grows exponentially with its users, and the network is accelerating. There's a principle in technology called Metcalfe's law. It states that a network's value increases exponentially with each new user. Think about it. One phone is useless. 2 phones? You can call one person a billion phones? You've got a global communication revolution. Bitcoin follows the same pattern. In 2013, there were maybe a few 100,000 Bitcoin users worldwide. Today, over 400 million people own cryptocurrency globally, with Bitcoin dominating that space. But here's what's fascinating, we're still early. Think about where the internet was in 1997. About 120 million users globally, roughly 2% of the world's population. People said it was a fad. Why would anyone shop online? Email will never replace real mail. Fast forward to today, and half the planet can't function without the internet. Bitcoin right now is where the internet was in the late 90s. We're at the I don't get it phase for most people. But the early adopters, they're watching the network effect compound right before their eyes. And there's a mathematical beauty to this. Bitcoin's stock-to-flow ratio measures its scarcity compared to production. Before the 2024 halving, Bitcoin's ratio was close to gold's. After the halving, it exceeded gold's scarcity. That means Bitcoin is mathematically more scarce than the asset humanity has valued for 5,000 years, but with the network effect of a technology company. It's digital gold meets Facebook-level growth potential. Here's secret number 4, and it's the most important one. Bitcoin's growth is supercharged by government money printing. Since 2020, governments worldwide have printed trillions in new currency. The US alone increased its money supply by over 40% in just 2 years. Here's what that means. Your dollar, your euro, your yen, they're all losing purchasing power. Not might lose, are losing. Bitcoin was designed for exactly this moment. Its creator, Satoshi Nakamoto, embedded a message in Bitcoin's first block, a newspaper headline about bank bailouts in 2009. The message was clear. This is an alternative to the system that prints money whenever it wants. And people are waking up to this reality. When real interest rates, returns after inflation, are low or negative, people search for alternatives. Bitcoin offers no central authority that can print more. Transparent monetary policy, everyone knows the supply. Borderless value storage. Seizure-resistant wealth. Here's a fascinating data point. Bitcoin's correlation with traditional markets has been decreasing. It's starting to behave less like a tech stock and more like an independent asset class. Some analysts project Bitcoin could reach anywhere from $200,000 to even $1 million per coin in the next 5 to 10 years. Why? Because if even 1% of global wealth flows into Bitcoin as a hedge against inflation and currency devaluation, the math becomes staggering. With a fixed supply of 21 million coins and increasing global demand, the price has only one direction to go, up. So here's the bottom line. Bitcoin's growth isn't a mystery. It's not luck. It's 4 powerful forces working together. 1. Mathematical scarcity through halving events, supply shock every 4 years. 2. Institutional adoption. The smart money finally understands it. 3. Network effects exponential growth as more people join. 4. Macroeconomic tailwinds, a perfect alternative in an era of money printing. These aren't theories. They're observable patterns that have played out consistently over 16 years. Now, here's the million-dollar question. Are we at the end of Bitcoin's growth story, with 93% of all Bitcoin already mined, but only a fraction of the world's population owning any? With institutions just beginning to accumulate, with governments printing more money than ever? The data suggests we're not at the end. We might be at the beginning. If this deep dive into Bitcoin's growth secrets opened your eyes, hit that subscribe button. Drop a comment below. Are you buying the Bitcoin growth story, or do you think it's overvalued? I read every comment. And remember, this isn't financial advice. This is education. Do your own research. Understand what you're investing in. But understand this, Bitcoin's growth has secrets. And now you know them. See you in the next one.